Hi, let's examine VA loans as types of mortgages. VA. The guarantee feature. Another type of non-conventional loan is the Veterans Administration loan or VA loan. VA loans offer a partial guarantee to lenders, offsetting risk should a borrower default. The purpose of the VA program is to provide home ownership for service members, veterans, and eligible surviving spouses. On June 22, 1944, the Servicemen's Readjustment Act of 1944 was signed into law by President Roosevelt. It is commonly known as the GI Bill of Rights. The act included the benefit of low-cost, no down payment mortgages. Whereas the GI Bills of 1944 and 1952 were given to compensate veterans for wartime service, the Veterans Readjustment Benefits Act of 1966 changed the nature of military service in America by extending benefits to veterans who served during times of war and peace. Before the GI Bill, college and home ownership were, for the most part, unreachable dreams for the average American. The GI Bill helped increase the home ownership rate between 1940 and 1960 by over 18%. Home ownership rates reached as high as 77.5% in 2012, outpacing non-veterans. National Association of Realtors reported a 72% of ownership rate for veterans in 2018 as compared to just 61% for non-veterans. Today, home ownership for veterans continue to be strong. Qualifications. Eligibility is based on military eligibility periods of active duty service and/or continuous service. Eligibility. Licensees should rely on VA lender to determine eligibility. Lending source. VA mortgages are provided by VA-approved lenders. VA does make direct loans, but only to Native Americans on trust land. They may also opt to issue loans deemed as special circumstances per VA guidelines. Eligible property. Single-family homes, or up to 4 units, building for residences, may qualify for purchase with a VA loan. The borrower must live in one of the units. All VA purchases must be owner-occupied. VA loans may be obtained to build a new home or to refinance a home. Discount points. The VA loan program allows lenders to charge discount points. Lender sets the cost of these points, which can be negotiated between the borrower and the lender. The purpose of the discount point for the buyer is to pay down the interest rate and lower the payment. Characteristic of VA mortgage loans. Qualifying ratios. To qualify for a VA loan, the borrower must meet TOR requirements of up to 41%. There is no housing expense ratio requirement under the VA loan. Qualifying ratios. Loan comparison. With so many different qualifying ratios based on the type of loan that's being sought, it's nice to look at it in kind of a column by column manner so that you can compare one type of loan to the other. So in our first column here, we do have our type of loan. In our second column, we have our housing expense ratio, and in our third column, we have our total expense ratio. So for conventional loans, remember that there is no housing expense ratio. Instead, you're only worried about the total obligation ratio. The FHA loan, on the other hand, has a mandatory 31% HER ratio or below and a total obligation ratio for debt at 43% or below. The VA loan, just like the conventional loan, does not have a housing expense ratio requirement and instead allows for up to 41% in the total obligation ratio. Loan limits. Unlike FHA loans, the VA loan does not have a maximum loan amount or home price that can be purchased. However, the buyer would need to be able to meet the VA TOR requirement in order to qualify. Certificate of reasonable value. VA does not set a limit for the purchase price. However, the value of the home must be verified through a certificate of reasonable value. Loan guarantee. VA has established loan guarantee limits. This provision limits the purchase price that can be bought without a down payment. The loan limits are the amount a qualified veteran with full entitlement may be able to borrow without making a down payment. These loan guarantee limits vary by county. Down payment. VA loans that are actually under the maximum guarantee loan amount do not require that a down payment be made. However, if a buyer's entitlement has been reduced by a previous purchase that the borrower still owns, then a down payment might become necessary. Plus, a buyer can choose to make a down payment if they desire to lower the amount of debt and the monthly payment from the outset of the loan. Entitlement. Entitlement is the amount of guarantee made by the U.S. Department of Veteran Affairs. Should the borrower default on the loan, the entitlement amount is covered by the department to the lender. Calculations for determining the entitlement amount underwent changes due to the Blue Water Navy Vietnam Veterans Act of 2019, effective January 1, 2020. If a borrower buys a lower priced home, thus not using the entire entitlement amount, the remaining entitlement may be applied to additional home purchases. Always direct buyers to an approved VA lender to assist with calculations for entitlement amounts and loan approval. Reusing the entitlement. When the VA loan is completely paid off, the full entitlement is again available. The certificate of eligibility shows the amount that is currently available. Appraisal. An appraisal for a purchase utilizing a VA loan must use a VA-approved appraiser. A VA-approved appraiser must retain a current residential appraiser licensure or certification issued by the state in which VA appraisals will be completed. Have submitted evidence showing at minimum 5 years experience in appraising residential properties. VA appraisers determine the value of a property for VA home loan guarantee purposes. VA funding fee. To offset the cost of the VA loan program, a funding fee is charged to the borrower. The funding fee is charged as a percentage of the loan amount. The fee percentage varies based on the type of loan and military category. The funding fee can be financed into the loan or paid at closing. Loan origination fee. Lenders providing a VA loan may charge borrowers an origination fee of up to 1% of the loan amount. Other closing costs. Closing costs such as the VA appraisal, credit report, state and local taxes, and recording fees may be negotiated to be paid by the borrower, the seller, or shared between them. Should a seller agree to contribute to a buyer's closing cost, the amount of contribution is limited to 4%. Payment made towards discount points are not considered to be included within the 4% limit. Rules of a VA loan dictate that the buyer may not pay the cost of the required termite inspection report. Instead, it must be paid for as a seller expense. No real estate broker commissions or broker fees may be charged to the buyer. Prepayment clause. VA loans have a prepayment clause which allows the loan to be paid off early. VA mortgages do not have a prepayment penalty clause. Assumption. VA loans do not have a due on sale clause, so VA loans may be assumed. VA loans taken out before March 1st, 1988 are assumable without a credit check for the new borrower. However, the original borrower remains liable. VA loans taken out after March 1st, 1988 provide for a novation agreement, releasing the original borrower from the debt. However, the new borrower must be approved. Interest rate. Interest rates are negotiated between the borrower and the lender as part of the free and open market. Points in summary about VA mortgages. Government guaranteed mortgage, loans made by approved lenders, requires no down payment so long as you meet the maximum entitlement benefit amount, there is no loan maximum, and can be assumed. With the VA loan, there is no upfront or monthly mortgage insurance charged. A funding fee is charged. Interest rates are negotiable. A loan origination fee at a maximum of 1% of the loan may be charged. There is no HER qualification requirement, and the TOR requirement is up to 41%. VA Home Buyer Specialist. With veterans having such a high ownership level, veterans as a group are a good demographic to work with as a target. The goal, of course, of any target marketing is not to take advantage of a group of people, but rather to set yourself apart as a specialist offering true value to the buyer and seller using your services. For example, the requirements of the condition of a home to pass a VA appraisal is higher than with either a conventional appraisal or an FHA appraisal. A licensee offering a true elevated value to a buyer using a VA home is to help the buyer select a home that will meet the elevated standards. This may mean encouraging the buyer to pass up homes that won't pass inspection. A licensee offering true elevated value to a seller hoping to attract a veteran is to understand how to advise the seller on making home improvements which will ensure that the home passes a VA appraisal. If you are interested in learning how to specialize in this demographic, I encourage you to search the many articles offered on the National Association of Realtors website. There are many there on this very topic.